Andrew Hauser, Director for Markets at the Bank of England, made the announcement. Hauser made the argument as part of a speech at the Federal Reserve Bank of New York on Wednesday. Hauser. The extent of the effects will depend to a large extent on the final design of any systemic digital currency. He also does not risk any red lines for the central bank balance sheets of digital currencies. However, central bankers need to start preparing by adding responses to their operational toolkit to the important consequences that central bank digital currencies, CBDCs, and hard currencies will have for their balance sheets. Don't forget to like the video and subscribe to my channel before continuing the news. Description of digital currency from the Governor of the Bank of England. Central banks control the money supply of a national economy using at least three main factors. To change interest rates, regulate commercial banks by setting capital and reserve requirements, and act as the last credit authority. The issued money is considered a balance sheet obligation, which, if necessary, can be withdrawn or sold to commercial banks. Hauser outlined how CBDCs and other digital currencies could deconstruct this system by changing the privileged relationship between central and commercial banks. Under certain conditions, digital currencies can increase credit competition. It could reduce the sum of deposits, and therefore reserve ratios, held in commercial banks and challenge the ability of central banks to serve as the final lending authority. Andrew Hauser, Director of Markets at the Bank of England, also addressed the collapse caused by Terra. He pointed out the ways in which such systems could be regulated. He recommended that in the UK, Bank of England should meet the standards expected of a commercial bank, including the strict headquarters of any stablecoin that reaches systemic size.